Hey, Abby, good to see you. I want to talk about the recent stock market stumble. I'm sure that you were talking about it, but as you know, recently the S&P just saw its worst day since May, at one point falling 1.7%. And I just want to jump right in here. Take a look at this chart from FinViz. At one point,
Mm.
every stock on the Dow, except for Merck, was in the red. So when we see, charts like this, what do we do as investors?
Yeah, it can be really intimidating and,
Yep.
and unnerving when something like this happens, especially because in the past year or so, everything's been on almost a straight shot up.
Right.
So volatility can be even more unsettling when we've had a period of pretty much smooth sailing.
Hmm.
So what I would recommend to investors is to really have a good feel of what kind of investor are you, where are you on your path of money, as we like to call it. So are you still in the accumulation phase? You've got maybe 20 more years to work, and you're really focusing on just that growth. Maybe this isn't going to have that much of an effect on your plan if there's this volatility.
Hmm.
Whereas maybe somebody that is within a couple years of retirement, this can really start to make a big difference because there's less time to make this up before you need to start potentially drawing from that. And also risk tolerance, there's been studies done, it typically decreases as we get older. We just don't have the stomach for it as much anymore,
Right.
which makes sense. So it's
Right.
just a good time to start having those conversations with you or your spouse or whoever you talk to about your plan, maybe an advisor. It's a good time, it's a good reminder to take a look at that and see how this could affect your situation.
Right. That makes a lot of sense. Speaking of those, so some strategists at Morgan Stanley are warning that the S&P could drop 20%. That's significant, of course. They're advising investors to be defensive. So if I want to invest defensively, what does that mean?
Yeah, so it's going to mean something a little bit different for everybody. And so I saw a couple of different institutions similar to Morgan Stanley came out and make a prediction that we're going to have some maybe some double digits volatility. So they weren't just the only ones to say that. And you'll see that this is the S&P 500 chart for this year, for 2021, from January to September. Believe it or not, it's September already. So you can see that this is choppy. It's never going to be a straight line. So something that I like to remind people is that 20% drops, they sound really bad and scary. They happen on average maybe like once every 1.5 years. So they're not super common, but they're also not very uncommon. So this
Right.
is going to happen. We saw that with the pandemic last year. It was a little bit more than 20%, almost into the 30% range, which is a little bit more rare. And also this is almost like a weatherman predicting rain, on a Saturday. Like, just something to think about, maybe plan for, have a plan B, if that does happen. But as we know, can't always predict the weather, and you can't always predict the market. So
Yeah.
I would caution people to not act too much on this and kind of throw your plan out the window. But if you're, especially if you're closer to retirement, maybe it's time to really start looking at your allocation of, how much equities are you in, how much are you in the S&P 500, because that diversification is really important, because there might be a 20% drop in the S&P 500, but international stocks might be doing really well at that point in
Right.
time. And so that's that diversification that's so important, that what we've seen is a lot of people getting away from, as certain asset classes really have outperformed everything recently. So it's tempting to really over allocate into those, but we have to remember that there's a reason, that we want to diversify. And sometimes you'll have losers in your portfolio that year and then winners, but it's really there to make sure that there's that balance there. But it's a
Right.
good time to take a look at maybe taking some chips off the table, so to speak. We've had a great run with stocks, and even some bonds last year did really well. So it's a good time to have that discussion and take a look and make sure you're where you need to be.
Right. I think what I'm hearing from you certainly is that a conversation with a financial advisor is always a good idea, but certainly if you are in or near retirement. So if somebody would like to talk about this a little bit more with you, Abby, what's the best way to get a hold of you?
Sure. So you can always give us a call at 678-442-0255, or you can visit our website, see a little bit more about us, and send us a message through there if you want to have a chat. We're at theretirementfamily.com, and we'd love to hear from you. Thank you
That's
so much,
wonderful.
Erin.
Yeah, Abby, thank you.